And everyone, welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I will discuss about JAIIB examination related MCQs. If you are preparing for JAIIB examination or looking to strengthen your banking knowledge, you are in the right place. Welcome to part 39 of my Path to the Corner Office JAIIB examination series, JAIIB Paper 1, Indian Economy and Indian Financial System, where I will break down real JIB examination related MCQs and provide clear, practical explanations to help you strengthen concepts and progress faster in your banking career. Today's MCQ subject topic, Paper 1, Indian Economy and Indian Financial System. Module D, Financial Products and Services. Leasing and Hire Purchase. Lease Finance, Evolution of Leasing in India, Types of Leasing, Advantages and Disadvantages of Lease Finance, market share of various leased assets classes, impact of leasing on financial ratios, legal aspects of leasing, regulatory aspects of leasing activities, hire purchase, evolution of hire purchase in India, legal aspects of hire purchase, parties to a hire purchase contract, leasing and hire purchase compared. Question. Lease financing primarily involves option A, sale of goods, option B, transfer of ownership, option C, transfer of right to use an asset, option D, hire of employees. Correct answer is option C, transfer of right to use an asset. Question. Which party is known as the owner of the leased asset? Option A, lessee, option B, lessor, option C, hirer, option D, dealer. Correct answer is option B, lessor. In which decade did modern leasing activities begin in India? Option A, 1950s, option B, 1960s, option C, 1970s, option D, 1980s. Correct answer is option C, 1970s. Question. A lease where risks and rewards remain with the lessor is called option A, operating lease, option B, finance lease, option C, sale and lease back, option D, leveraged lease. Correct answer is option A, operating lease. A lease that covers the entire useful life of the asset is usually option A, operating lease, option B, finance lease, option C, short-term lease, option D, cancelable lease. Correct answer is option B, finance lease. Question. Under a finance lease ownership, option A transfers immediately, option B never transfers, option C transfers at the end optionally, option D transfers mid-term. Correct answer is option C transfers at the end optionally. Question. Lease rentals are treated as what in the leases books? Option A asset, option B income, option C revenue expense, option D capital asset. Correct answer is option C revenue expense. Question. Which of the following is not an advantage of lease finance? Option A, lower upfront cost. Option B, off-balance sheet financing. Option C, tax benefits. Option D, guaranteed ownership. Correct answer is option D, guaranteed ownership. Question. Which type of lease is commonly cancelable? Option A, finance lease. Option B, operating lease. Option C, leveraged lease. Option D, sale and lease back. Correct answer is option B, operating lease. Question. In India, the activity of leasing is regulated primarily by option A, RBI, option B, SEBI, option C, IRDAI, option D, Ministry of Finance. Correct answer is option A, RBI. Question. Hire purchase is governed legally by which act? Option A, Companies Act. Option B, Hire Purchase Act 1972, not enforced. Option C, Banking Regulation Act. Option D, Sale of Goods Act. Correct answer is option B, Hire Purchase Act 1972, not enforced. Question. In hire purchase, ownership passes to the hirer. Option A, at the beginning. Option B, at the end after final payment. Option C, midway. Option D, never. Correct answer is option B, at the end after final payment. Question. In hire purchase, the initial amount paid is called option A, margin money. Option B, rent. Option C, hire charges. Option D, down payment. Correct answer is option D, down payment. Question. The party who gives goods on hire purchase is called option A, lessee. Option B, hirer. Option C, lessor. Option D, owner. Correct answer is option D, owner. Question. A key disadvantage of leasing is option A, no need of high initial investment. Option B, maintenance cost avoided. Option C, higher long-term cost. Option D, flexibility in cancellation. Correct answer is option C, higher long-term cost. Question. Which lease is also known as full service lease? Option A, operating lease. Option B, finance lease. Option C, net lease. Option D, cross-border lease. Correct answer is option A, operating lease. Question. Which of the following activities is not typically covered in an operating lease? Option A, maintenance. Option B, repairs. Option C, ownership transfer. Option D, replacement. Correct answer is option C, ownership transfer. Question. In a finance lease, the risk of obsolescence lies with option A, bank. Option B, lessee. Option C, lessor. Option D, dealer. Correct answer is option B, lessee. Question. A sale and leaseback arrangement helps a company in option A, increasing debt. Option B, reducing liquidity. Option C, unlocking capital. Option D, increasing asset ownership. Correct answer is option C, unlocking capital. Question. Which asset class accounts for the maximum share of leasing in India? Option A, real estate. Option B, IT equipment. Option C, automobiles. Option D, heavy machinery. Correct answer is option C, automobiles. Question. Lease finance impacts the lessee's balance sheet by option A, increasing fixed assets, finance lease. Option B, reducing long-term loans. Option C, increasing owner security. Option D, reducing depreciation. Correct answer is option A, increasing fixed assets, finance lease. Question. Hire purchase is best suited for Option A, perishable goods. Option B, long-term use assets. Option C, services. Option D, digital products. Correct answer is option B, long-term use assets. Question. In hire purchase, the hire liability ends only after option A, delivery of goods. Option B, payment of hire purchase charges. Option C, payment of all installments. Option D, signing agreement. Correct answer is option C, payment of all installments. Question. Which of the following is not a party to a hire purchase agreement? Option A, hirer. Option B, owner. Option C, vendor. Option D, lessee. Correct answer is option D, lessee. Question. A key feature distinguishing leasing from hire purchase is option A, use of assets. Option B, type of assets. Option C, ownership transfer mechanism. Option D, payment frequency. Correct answer is option C, ownership transfer mechanism. Question. In leasing, the lessee shows the leased asset as option A, its own asset, finance lease. Option B, investment. Option C, loan. Option D, royalty. Correct answer is option A, its own asset, finance lease. Question. Which type of lease involves a third party lender? Option A, operating lease. Option B, leverage lease. Option C, finance lease. Option D, cross border lease. Correct answer is option B, leverage lease. Question. Under hire purchase, default by hirer gives owner the right to option A, sue for damages only. Option B, repossess the goods. Option C, charge extra tax. Option D, force ownership transfer. Correct answer is option B, repossess the goods. Question. Regulatory oversight of NBFCs conducting leasing is done under option A, Companies Act. Option B, RBI Act. Option C, Negotiable Instruments Act. Option D, FEMA. Correct answer is option B, RBI Act. Question. Leasing versus hire purchase. Key difference. Option A, installment payments exist only in leasing. Option B, ownership never transfers in leasing. Option C, ownership transfers early in leasing. Option D, hire purchase is cheaper than leasing. Correct answer is option D, ownership never transfer in leasing. Thank you very much for your patience. Request for like, subscribe and share.